This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. President Trump says he'll speak with China's Xi Jinping on Friday as negotiators reach a framework deal to keep TikTok running in the US. That should help boost sentiment in Asian markets, with Japan returning from a long weekend. Wall Street notching fresh highs on bets that a Fed rate cut this week is a sure thing. And the Senate set to vote soon on Stephen Miran's nomination as Fed governor, paving the way for him to join the central bank's policy meetings.
Futures across Asia in the green right now. Of course, the MSCI Asia Pacific Index already near record highs. We do have mainland Chinese markets continuing to rally. The South Korean Kospi also at a record high, gaining for 10 consecutive sessions. Japanese stocks, fresh highs as well. They're coming back from a long holiday. Take a look at the Chinese yuan as well at the moment, holding at that 7.11 level. This against the U.S. dollar. And we're seeing a little bit more of a boost after the U.S. dollar fell in the overnight session. And this, of course, to do with the rate decision coming from the Federal Reserve. Take a look at how two-year yields are faring, because we continue to see the downside pressure, especially in the short-end yields in the U.S. markets. This with expectations that we are going to see that 25 basis point rate cut on Wednesday. But could it be a 25 basis point? Could it be a 50 basis point is the key question. And, of course, what happens next? And take a look as the yields have come down. We have seen U.S. stock markets continuing to rally. The S&P 500 topping that 6,600 level, that $14 trillion everything rally, also seeing Alphabet joining the $3 trillion club. The question is, what happens with the dot plot? Are we going to see less clear indication of what happens into next year? That could be a key concern for the markets. And, of course, we always have geopolitical tensions and trade headlines to contend with, Belle.
Yeah, and actually on that point, Shery, I mean, we had sort of some further progress perhaps in Madrid, but President Trump says he's going to be speaking with Chinese leader Xi Jinping on Friday about what he calls a big deal. He spoke after officials from both countries meeting in Madrid, reaching a framework deal on keeping TikTok alive in the US.
It's important, and it can maybe even bring us closer to China.
Let's bring in Bloomberg senior editor Derek Warbank. And so Derek, I mean, you heard it there from President Trump. He's relatively optimistic on what's come out of the meeting so far. But what's your take as we exited from day two of the talks?
Well, Annabelle, I'll tell you, the biggest thing that I took from Donald Trump was saying that he wants to get to a deal on TikTok. He has said that for a long time now, but he said he's much more concerned with having a big deal with China. That, to me, says that there's a lot of things at play here, that we're looking for something of a bigger scope, of a wider scope, certainly, between the U.S. and China. Now, there is that law about TikTok and getting that into a different form of ownership that has to be contended with. But make no mistake, this is a president who has been willing to suspend the provisions that suggest that TikTok should have to go dark at some point, waiting for a deal. He's been more than willing to do that. I would suspect he would be willing to continue so to do as long as was necessary, as long as he thought that the talks were going in the right direction. But this is Trump clearly signaling he wants a bigger deal. He wants to have a larger understanding with China and with Xi Jinping. You are looking at a conversation on Friday. Those conversations have tended to be quite detailed. They have tended to be quite lengthy. They have tended to cover an awful lot of subjects. And bear in mind, this is maybe a phone call leading up to a potential physical meeting that would take place later this year. You would be looking somewhere in the end of October, early November time frame there. And the question at that point is not just what they discuss, not just how long they discuss it, but where they discuss it. The Chinese certainly would like to have those in-person conversations, maybe in Beijing. There's also some thoughts that Trump and Xi might both be in South Korea for the APEC meeting, so that might be another venue for that. But all of this is sort of going in a direction, and that's kind of the direction. A lot of things at play here. TikTok is but one of them.
Yeah, really the backdrop pretty challenging still, with China now continuing to pressure the U.S. chip sector, this time on NVIDIA.
Yeah, that's right. And China had an investigation on Nvidia about a deal that was made a couple years back. Look, you have to sort of take all of this stuff and you say there's sort of two ways to look at it. And I think you sort of have to look at it in both ways at the same time. The first is in a face value. Is there some sort of antitrust kind of thing that China may be looking into, taking it at face value, and that's what they're doing. The second thing is that, timing is what timing is. And you say, okay, well, what does this mean in terms of being put into that larger pie, in the larger, form of discussions? We've seen this with the U.S. and China in a lot of different ways over the last couple of years, that lots of different things get thrown in, right? The issue of TikTok is an issue of its own, but it's also an issue that could relate in this sort of larger context as you're hunting for a larger deal. And certainly, I think in a U.S.-China context, all of this stuff kind of gets put together. All of this stuff, it's one of those things where the old axiom is there's not a deal on one thing until there's a deal on everything, and all of these things just sort of go into the pie and get baked in together. So I would sort of look at it kind of in that framework. You did see Nvidia drop a little bit on the announcement. You also saw Nvidia pull a lot of that back. I think all of that back. And so I think that there's the market response so far has been a little bit of a let's wait and see. But overall, you're looking at what's the overall tone and tenor with Trump and Xi right now. It's certainly going towards talks. It's certainly going towards not just one set, but maybe another one in the not too distant future. And so that's kind of the overall environment that we're looking at in this relationship.
Yeah, and I guess to your point, Derek, TikTok may be the low-hanging fruit in this as well, that a deal on that paves the way for more negotiations. That was our senior editor, Derek Warbank, there. Thanks for joining us. And some of the other stories that we're following this morning, well, US officials are in India for trade discussions, signaling that the two nations may be moving closer to resolving differences. The negotiations come weeks after President Trump doubled tariffs on India to 50%, citing New Delhi's trade barriers and purchases of Russian oil. Trump earlier said he will speak with Indian Prime Minister Narendra Modi in the coming weeks. President Trump is again calling for an end to quarterly reporting requirements for companies, echoing comments he made during his first term. In a social media post, Trump says the move would save companies money and allow them to focus on properly running their businesses. US regulators mandated quarterly reporting in 1970 in a push to boost transparency. And China's foreign exchange regulator has streamlined the country's cross-border investment and financing rules. In an effort, or renewed effort, to deepen market reforms and attract overseas capital, the regulator's easing restrictions on the use of foreign exchange for property purchases. Registration requirements for preliminary expenses and reinvestments have also been scrapped.
Senate Republicans are planning a vote soon to confirm President Trump's nomination of Stephen Miran as a Fed governor. That could clear Miran to participate in the Fed meeting beginning on Tuesday. Bloomberg chief economist Tom Orlik joins us now for the latest. And Tom, this rate cut from the Fed is almost completely priced in, but are there any longer-term implications given that if Miran is confirmed, he would stay in the post at least until January?
So, I think there's a couple of big questions, Shery. So the first is, what's the Fed going to do at its meeting this week? Our view and the consensus in the market is that a 25 basis point cut is pretty much baked in at this point. That's not what President Trump wants. He wants the Fed to go further and faster, 50 basis points straight away. It's also not what we think is justified by economic conditions. Inflation running close to 3%, unemployment just 4.3%. These are not conditions which scream rate cut. And so that brings us to the second big question. Is the Fed now going to be captured by political interests? So some important things to watch there. Firstly, how does Stephen Miran, the chair of Trump's Council of Economic Advisors, behave once he gets onto the Fed board? Miran, remember, was the co-author of a lengthy paper back in 2024 which made a case for more accountability for the Fed, code for reducing its independence. Also important to watch what happens to Governor Lisa Cook. Cook, of course, has been charged by the Trump administration with lying on her mortgage applications. They say that's sufficient cause to remove her from the board. If they succeed in making that case, very likely on its way to the Supreme Court for a final decision, that's going to give them a huge amount of leeway to reshape the board and put on low-rates loyalists.
And Tom, just as you're speaking there, we've actually got a feed showing you here the Senate. We've got that vote, or the procedural vote rather, on Stephen Miran's nomination that's just begun in the last minutes or so. Final confirmation vote expected within the hour. But let's also talk about other ways that that President Trump is looking to reshape the Fed board. I mean, we've of course been getting these updates on any sort of interviews that are taking place to replace Jay Powell, for instance. And Reuters is now saying that Jim Bullard met with Scott Bessent.
Yeah, I think that's right, Annabelle. I'm sure my friends from Bloomberg News Fed team would ask me to remind Bloomberg TV viewers that that's something they've been reporting for a number of weeks. But certainly interesting to hear that Bullard is definitely on that short list. I think there's a couple of questions. So the first question is, who replaces Powell? Is it someone who has credibility with the markets? Or is it someone whose main recommendation is their political alignment with Donald Trump? I think the best case scenario for Fed independence is that the next Fed chair ticks both of those boxes. The second big question is what happens to Governor Cook? Now, that's really important because something else happening next year is the reappointment of regional Fed presidents. Now, if Cook stays on the board, then that process, I think, will be fairly straightforward, and we see a lot of familiar names coming back and some credible new names coming onto the board. If Cook gets booted out, which is a real possibility, given how much the Supreme Court has aligned with President Trump and deferred to him in other cases over the last few months, well, that would mean that there's a majority of Republican-appointed, Trump-appointed governors on the board, and that would give them considerable scope to change the composition of regional Fed chiefs, and hence to completely overhaul the makeup of the Fed board. If that happens, that's when we'd really start to get concerned about political capture. That's when the bond market would start doubting the credibility of the Fed's commitment to fight inflation. Potentially, we'd see long-term yields rising, and some pretty significant consequences for the US economy and for global financial markets.
That was our Bloomberg Economics chief economist there, Tom Orlik. Thanks for joining us. And as we said, we are taking a look at what's happening in the Senate right now because that confirmation hearing or procedural vote on Stephen Miran's nomination is just underway. There is a confirmation vote that's now actually expected to begin at 7:15 p.m. That's Eastern time, so really imminently, of course. But it is the vote, of course, on Steve Miran's nomination to the Fed Board of Governors, and really looking at ways that President Trump is looking to reshape the voices on the Fed Board. But coming up on the Asia Trade as well, we're going to be talking markets with Moneta ahead of the Fed's, of course, all-important decision this week. And then later as well, the Asia Society Policy Institute is joining us to analyse talks between the US and China in Madrid. Plus, the Climate Council will be with us to discuss Australia's climate ambitions. So much more ahead. This is Bloomberg. You're watching the Asia Trade this morning and taking a look at how futures are setting us up ahead of the opens in Sydney, Seoul and the restart of trade in Tokyo, of course, after a long weekend there. But we are looking pretty optimistic here. I mean, it was a good session on Wall Street. We saw a fresh high for the S&P 500 above 6,600 points. The Nasdaq seeing its biggest jump or longest advance going back to 2023. Tesla was bid. I mean, lots of big movers in the session, and also this continuing anticipation we are going to be getting this Fed rate cut this week. Let's get more on the outlook now for equities. Bring in Aoifinn Devitt. She's Chief Global Market Strategist at Moneta. And Aoifinn, I really liked in your notes that you said that there are limited risks to the downside. But I am wondering what you think about the risk of the Fed, yes, cutting this week, but signalling as well that they're not at the start of an easing cycle, and how that's going to be interpreted by traders.
I think we have to go back to the conversation you just had with your colleague. It seems now that really all expectations are stacked, if not around certainly a single rate cut, but probably a double of 50 basis points if the Fed were to lean in to some of the data. And then you're looking into the medium term, it does seem that a Fed that is going to be, I love the term low rate loyalists. If that is in fact the case, then it will be easing then. So I'm not sure. I think as the Chairman Powell's tenure comes to an end, which it will be coming to an end relatively soon, his words will have less currency, and investors will be looking into the medium term.
And so what does the medium term look like to you then? I mean, is it still that bullish outlook then for stocks? Can we extend from here?
In terms of the Fed, we're looking at, I think, an easing cycle that will be gradual. We have to understand that, yes, independence is certainly looking like we have to redefine that maybe. But then we should also remember that independence is not necessarily a binary thing. These are respected economists who have to remain data dependent. They cannot be puppets of an administration. So I think they will be seeking to assert that independence themselves, however, perhaps more in line with the administration's wishes to bring that stimulus into effect. So I would see that as being very conducive to supporting equity markets. We have also the technical factors that we still have a lot of money on the sidelines on equity markets in money market funds. And we have these overwhelmingly resilient indicators. So I think all of that stacks up very well for a positive, supportive environment for equities.
Even we have President Trump also delving deeper into intervention in the markets, talking about reporting every half year instead of the quarterly results that we are used to getting. What are the implications of that? Because there have been concerns about risks around transparency as well.
It's a great question. And this is just another example of something that has really emerged from left field, which is yet another item that is starting to flood the zone, which investors now have to contend with. I'd say, whereas this is something that is certainly not new, we have spoken about how many companies have chosen not to go public or to stay private or go private because of the burden of being public. And we all know that short-termism, whether it's in politics or in earnings results, can generally be an incentive for the wrong kind of behaviors, for managing or maybe massaging earnings. So we all know about what the problem with quarterly earnings is. But I think if investors were to go from a diet of quarterly earnings to a less frequent diet of semi-annual earnings, this would be akin to going to an intermittent fasting diet. We know what that does to the system. It's a shock. It could be better in the long term, but the adjustment phase could be significant. So we have to look at that and the fact that maybe we're used to this cadence right now, and it would be a big adjustment, I think, to change it.
At least for now, it seems that investors are looking for any excuse to continue sending stocks higher. How big is the risk when the markets are so narrowly focused on this rally around tech? I mean, we saw Alphabet now joining the $3 trillion club, but we have seen other companies as well really rallying on potential of future earnings, the likes of Oracle, the likes of Broadcom, for example. If we don't stay at these levels when it comes to these investments paying off, how big of the risk is it long term, especially going into next year?
It's a great question. And at Moneta, we've been really focused on that magic 40% number, the fact that 40% of the index is now in the top 10. That is very concentrated relative to history. And we think that that means that we're going to look at equity markets as having a much more volatile profile when it comes to those top 10 stocks. We know that a disappointment or a miss or a report about AI's productivity impact, that can cause a high single digit or a double digit fall in any stock in one day. So that's the kind of environment that we're going to have to deal with there. However, the rest of the stock market, we think, is generally broadly supported because we haven't seen a dash for trash. We know that the dash in the top 10 stocks has generally been supported with earnings, growth metrics, and just more capex spending coming across the board. So I'd say that gives it a more solid underpinning, the current rally. And there are risks to the downside, certainly, if there are unpleasant surprises around policy, or if we have perhaps a geopolitical surprise. I think a much bigger risk is that the consumer is weaker. And we haven't really been focusing on that in all of the focus on stock market highs.
Yeah, and I think it's interesting you point out there are some risks to the downside, and one of the ways that's being expressed is in that flight to safety, and you see that with gold, for instance, that continues to hit fresh records. What's the expression of that, or what is that expressing, and why are you seeing gold rallying at the same time you see stocks rallying?
Very interesting point. We're seeing many different factors driving that gold rally. There is, on one end, there is a fear around fiat currency, a dollar debasement. We have seen this weakening of the dollar, as well as just a fear that the fiscal budget deficit will be too much to bear on a global scale, that we don't see many governments exempting themselves from that worry. But that wouldn't be what I described as a kitchen table issue for most investors. We see gold as being a diversifier for many, and certainly the trend following, the strong performance can beget more demand. And then finally, the technical factor from China. We know that China is cycling into gold, and perhaps at the expense of owning US treasuries or the US dollar. So there is that factor driving it too. So many different factors behind this, but I don't see that any of these factors are close to the end of their run.
Even Devitt, good to have you with us, Chief Global Market Strategist at Moneta there. And we continue to watch the Senate vote on the nomination of Stephen Miran to the Federal Reserve Board. A final vote on the confirmation is planned for within the hour, and Miran's confirmation would allow him to attend the FOMC meeting that starts on Tuesday. The Fed expected to cut rates there. We'll bring you the latest as we get that vote ongoing right now at the Senate hearing. More ahead on the Asia trade. This is Bloomberg.
Taking you back to these live pictures this morning that we have from the Senate. This is the final confirmation vote for Stephen Miran to join the Fed Board of Governors. It has been quite a fast process for him, but of course there's very important timing for this because his confirmation would be setting him up to walk into that FOMC meeting that kickstarts on Tuesday, Shery.
Yeah, and that FOMC meeting now all priced in for a rate cut. Will it be 25 basis points? Will it be 50 basis points is a key question. And what happens next, right? And this is interesting because Stephen Miran will be taking a seat that was unexpectedly vacated. So this term expires in January. So he actually said that he would take an unpaid leave of absence from the White House Council of Economic Advisors. But what happens next is still a question, Belle.
Yeah, that's right. I mean, it's also that question of his other roles as well. He has chaired the White House Council of Economic Advisors. He is planning to take an unpaid leave of absence from that to join the Fed with no clarity yet, of course, on how long he might remain as well. But that confirmation hearing underway right now. We'll get the details on that vote as it comes to hand. More ahead.
We had a very good meeting with John. I was surprised. I didn't expect it to that extent. And I'm going to speak again with President Xi on Friday. And, you know, I think that'll confirm things up.
President Trump looking ahead to Friday's call with China's Xi Jinping after trade talks in Madrid struck a framework deal on keeping TikTok running in the U.S. Joining us now is Wendy Cutler, Vice President at the Asia Society Policy Institute. She previously served as the acting deputy at the U.S. Trade Representative. Wendy, always great to have you with us. What do you make of the Madrid talks? Because we saw some progress on TikTok, but at the same time, China, in the backdrop, continues to apply pressure to the U.S. chip sector.
Look, the TikTok framework deal is a welcome development. This has been a long-term irritant in our relations with China, so it's good that it's on the path to solution. But there's so many other issues that are challenging this relationship. And if it took 2 days of talks to basically deal with TikTok, it's hard to see these other issues being resolved over the coming months. I think it's just going to take longer.
Could something of a breakthrough be achieved in the President Xi Jinping and Trump leader summit?
Well, first, they're going to have a call on Friday. I think that call is important in that they can confirm the TikTok deal, and hopefully they can set a direction forward for their staffs to work together intensively leading up to the APEC meeting. But again, there's, between fentanyl and export controls and soybeans, there's just so many issues that these two countries need to work on intensively.
How big of a priority was TikTok in the grand scheme of things when it comes to those low-hanging fruits that the two countries can target at the moment, and what could be next?
So I view TikTok as of medium importance. What made it rise to the top was the Wednesday deadline to reach a decision or else to kick TikTok out of the United States. And so that deadline, I think, served to reach a resolution on in this area. But again, there are issues including semiconductors and soybean purchases and excess capacity. All of these issues need to be looked at between the two countries to help stabilize the relationship. I'm not talking about strengthening or improving it. I'm talking about stabilizing it. And that is going to take more work from both sides, particularly if the tariffs are going to be rolled over. The tariff cuts are going to be rolled over again on November 10th when their 90-day clock expires.
Yeah, you mentioned semiconductors. I mean, how much do we really need to read into the TikTok deal when you had as well China targeting NVIDIA, for instance, overnight, going back to a 2020 deal?
Exactly. And I have to say, as a trade negotiator, I have never seen a trading partner overnight in the middle of trade negotiations to hit the other country with such a strong measure like finding one of its key tech companies in violation of its anti-monopoly law. So I don't think that helped contribute to a good atmosphere in the talks, but I give kudos to both sides for finding a way forward, at least on one issue of concern, TikTok.
Do you think then enough has been done right now to sort of set the stage for any travel of President Trump to Beijing later this year, or does that sort of look unlikely still for now?
I think there's a good start, and Secretary Bessent mentioned that the two sides will get together at his level within a month. So you could see other issues being worked at the working level and then, being put forward to Vice Premier He and Secretary Bessent. So I think there still is a good chance of at least a meeting in Korea. I'm not sure if circumstances are right for a President Trump visit to China yet.
Wendy, I find it really funny that you mentioned imagining being a trade negotiator now and how NVIDIA became targeted while the China-U.S. conversations went ongoing. But that seems to be the case these days, isn't it? Even in the U.S., I mean, could you have imagined an immigration raid in that Georgia plant by South Korea after that trade agreement was announced? I mean, how big of an issue is this for Seoul? Because that issue seems to be dealt with. But what's happening to all of those investments going into the U.S.?
Well, I couldn't agree more. And I'm just returned from Korea. And believe me, I've heard a lot of concerns and a lot of caution about investing more in the United States. And at the same time that we were detaining Korean workers in Georgia, we're pressing the Korean government to set up an investment fund of $350 billion in the U.S., where basically Donald Trump would decide which investments made sense and which one should go forward. So it's kind of a tense time in Seoul. And I think that I was heartened by the Deputy Secretary of State apologizing for the visa raids and emphasizing the need to find a way forward on visas, because that's going to be critical if Korean companies are going to have the confidence to keep investing at those same levels in the United States.
Yeah, it certainly was a mea culpa of sorts yesterday. I mean, it's really hard to not sort of reinforce just that maybe the level of damage that's being done from this, and not just the signal that it sends to Korea, but also the signal it sends to other places like Taiwan, where you're asking businesses to shift investment to the US. But how much of this is a setback then? Just go back to what you learned in Seoul, and what did you learn more on the ground there about sort of the inclination to strike a deal?
Well, again, I think the Koreans are concerned about going forward with this huge investment fund. And after they read the MOU between the U.S. and Japan, which made it clear that while there's a committee where the Japanese can input into recommended projects, at the end of the day, it's a U.S. decision. Japan, focused on just getting those auto tariffs down, was willing to make that concession. It's unclear whether Korea is in a similar position, but still it places top priority on reaching an agreement with a close ally and getting the tariffs down, particularly in the automotive sector.
And talk about allies getting blindsided by the Trump administration. India, U.S. officials now there trying to negotiate a trade agreement. What are your expectations when we have, of course, seen the threats of 50% tariffs on all Indian goods?
Yeah, actually, I'm kind of optimistic on the India front. I think we got very close to a trade deal with them. And the signals coming out of both Washington and Delhi suggest that both sides do want to finalize an agreement. That's positive, but again, we need to keep in mind that trust has been broken and that it's going to be hard to get back to where we were. It's going to take time and effort, and hopefully a trade agreement concluded between the U.S. and India and a reduction in those high tariffs would be a positive first step to kind of repairing this relationship.
Wendy, thanks so much for joining us this morning. That's Wendy Cutler there, Vice President of the Asia Society Policy Institute. And let's shift back to what's happening in the Senate now, because Republicans are voting on President Trump's nomination of Stephen Miran as Fed governor, or a Fed governor.
No problem. Thank you so much.
That could clear Miran to join the central bank's policy meeting beginning on Tuesday. Bloomberg's Chris Condon joins us now for more. And Chris, I mean, the speed at which this has been done has certainly been one of the elements of surprise. But what are we expecting out of this? And it seems like the stage is set really for Miran now to join the FOMC meeting that starts tomorrow.
I really don't think there's any reason at this point not to expect that Miran will be in attendance at tomorrow's Federal Open Market Committee meeting. He'll be confirmed, it appears, from everything we see, he will be confirmed by the Senate this evening on a party line vote. And as long as they pass the paperwork over quickly to the Fed, which we expect, he will be sworn in either tonight or tomorrow morning. And the meeting will begin tomorrow. So anywhere, 8:30 to 10 o'clock is typically the starting time. I fully expect he'll be sworn in time, and he'll be a full participant in that meeting.
And what happens next? Because this was a seat that was unexpectedly vacated. So it's supposed to end in January, right?
Right. Okay, well, let's break this down in a couple of different ways. First of all, let's talk about what's not going to happen. His participation will not change the outcome of tomorrow's rate decision, just taking that narrowly. They're already on track to cut rates, most likely by 25 basis points. Now, you mentioned the term of the seat he's taking expires at the end of January. A few different things can happen at the end of January, and we don't really know which of these options will happen. Number one, Donald Trump may nominate him and seek his confirmation for a full 14-year term that begins in February. Number two, Trump might nominate somebody entirely else to fill that full 14-year term, or Trump may nominate no one at all. And in that case, Miran can stay on indefinitely. As long as no one new is confirmed to the full new term, he can stay on as long as he likes. So there's no reason to assume this will be a very short stint It may well be that way, but there's no reason to absolutely say it will be a short-term stint.
Stephen Miran's also chaired the White House Council of Economic Advisors, and we know he's planning to take a leave of absence from that, but there have been concerns about conflicts of interest. Do you think that they've been resolved for now?
No, not at all. Absolutely not at all. He is, no matter how you want to frame it, is still the chairman of the Council of Economic Advisors. He'll be on an unpaid leave, but he is still an employee of the White House. And he will be a participant in the FOMC meeting. I really don't see the argument of how that does not undermine claims of political independence of the monetary policy decision-making process. I don't see how it cannot at least incrementally undermine the Fed's credibility, knowing exactly what we know about President Trump and his desires for monetary policy. He wants lower rates without consider, at least without showing any concern for the other side of the Fed's statutory mandate, which is to watch out for inflation. So if the Fed and this is the key part, if because of this addition to the Fed and other steps that are underway, like the attempt to fire Governor Lisa Cook, if this undermines the credibility of the Fed in pursuing price stability, that is their 2% inflation target, that's undermined among investors, then you will see yields on treasuries go up. You will see inflation because inflation expectations will rise. Now, we're not seeing that yet, to be fair, but that is, of course, the big risk here, that the Fed's credibility on fighting inflation gets undermined.
Yeah, absolutely, Chris. I mean, it's one of the reasons we've seen so many moves at the long end of the Treasury curve, just this question of Fed independence and is that being tested. But great to have you with us. That was Chris Condon there as we await, of course, the outcome of this final vote for the confirmation of Stephen Miran to the Fed Reserve Board of Governors, paving the way as well for him to join the FOMC meeting starting Tuesday. But we'll get more details on that as they come to hand. In the meantime, as well, taking a look at what's happening in terms of equities in relation to the run-up to the Fed meeting as well, because we actually have seen big moves in emerging market stocks, EM currencies as well. So really it's this sort of optimism. We're seeing a little bit more appetite for risk, and so that's being reflected what we see there in EM markets, EM currencies as well, being supported not just by that appetite for risk, but also around the strength of the Chinese yuan that is as well boosting this. And China has been a big beneficiary and really the epicenter as well of the AI development boom. But we'll have more details on that ahead as we look ahead to the opens in Sydney, Seoul and Tokyo. This is Bloomberg.
Annabelle will be watching Tesla suppliers in the Asia session. We saw the Tesla stock surging in the overnight session with Elon Musk now buying about $1 billion worth of Tesla shares. Of course, this comes after the proposed payout package for Elon Musk of $1 trillion. He bought $1 billion worth of Tesla shares, which sent the stock higher, recovering from a 45% decline as of early April. And of course, all of this coming at a time when we continue to see the latest news on his payout when it comes to achieving some of those very ambitious targets for the car maker that could amount to $1 trillion. So we heard the news about really Elon Musk investing in this company. And of course, we are expecting the reaction also from the Asia suppliers as well in today's session.
Yeah, it'd be interesting to see how they move, given that things haven't really changed fundamentally for the business. But definitely Elon Musk, I mean, buying up that amount of stock. And as you said, it's a $1 trillion pay packet, but there's a lot of T's and C's that are attached to it as well, including the level at which the equity trades or the stock trades. But let's also take a look at another story as well, because this one really moved in the session yesterday in Hong Kong. CATL, which is the big battery maker, of course, but it got an upgrade from JP Morgan, essentially. So they've got a strong earnings outlook. They're optimistic as well about their energy storage business, rather. So EV battery is the main component of the business, but energy storage is becoming increasingly important. And so we saw a big jump in CATL in the session yesterday, looking at that against LG Energy Solution. I mean, really kind of flat year to date.
Yeah, we have seen Chinese battery stocks really restaging that rebound in recent weeks, that enthusiasm over some of those plays in the EV sector. We'll also be keeping a close eye broadly on the MSCI Asia Pacific Index today because the benchmark touched a record high on Monday before closing just short. Let's bring in Asia stocks reporter Yu-Kyung Lee. Yu-Kyung, we continue to really push higher when it comes to broadly Asian stocks. The Kospi at a record high, the Nikkei at a record high. Could we end up above the record close today?
So we'll see when the market opens, but I think one thing is clear for sure. Very few people will be surprised if the MSCI Asia Pacific Index goes to the record high today. I mean, as you just said, we've seen Korea closing at the record high last week, and then since then has been in one of the longest winning streak, keep renewing its record close. And we've seen Japan also hovering near the record high, and other markets also seeing a remarkable dramatic rally since the April Liberation Day. And I think this shows that how much Asian investors are enjoying liquidity, and also there's this great investor sentiment with this the headline risk from tariffs has been easing since this Liberation Day, and the negotiation between the governments has been ongoing. So I think investors seem to be more forward-looking, especially the Fed rate cut, if the Fed cuts the interest rate as investors widely expect, that's only going to burnish the appeal of assets in the emerging markets like in Asia. So I think a lot of people are still hesitant to leave the party a little too early, but I think in upcoming weeks we'll definitely see more debates about how long this rally is going to go.
Yeah, and I'm just actually taking a look at how the Kospi's performed. I mean, it's been up for 10 straight sessions. How long does that extend, and which pockets of the market are you watching in particular?
Yes, so if the Kospi also closed higher today, that's going to be one of the longest winning streaks since a few years back. But I think there's one sector if the investors going to closely watch is the webtoon related sector or the digital comics related sector. We just got the announcement from Walt Disney that it's going to invest in the U.S. listed a webtoon company called Webtoon, and they're going to launch some digital comics apps and platforms together. So that has sent this U.S. listed Webtoon stocks soar as much as 90%, and Naver, which is parent of this Webtoon, might see some upside after this announcement. So we're going to definitely watch these digital comics related stocks and some of the internet platform service provider for these digital comics. I think that's going to be where a lot of interesting trading actions can be coming from this morning's trade.
That was our Asia stocks reporter Yu-Kyung Lee there. Thanks for joining us. And let's take a look at morning calls as well ahead of the Asia trading day, because JP Morgan's chief global strategist says that the Fed is widely expected to cut interest rates this week, but that will also increase the risk for stocks, bonds and the dollar if it's perceived to be driven by political pressure and doesn't align with the central bank's economic forecasts. David Kelly says investors in both asset classes should take a cautious stance and look to diversify after the recent rally. And strategists at Bank of America believe the current rally in Chinese stocks is unlikely to match recent bouts of euphoria. Looking at the options market, they argue that further gains may be limited, given that positioning is already quite bullish. The rally, driven by big tech and support of government policies, has sent the CSI 300 into overbought territory. We'll have more ahead on the Asia trade. This is Bloomberg.
These are some of the stocks that we'll be watching when trade opens in Australia, Korea, and Japan, also coming back from a holiday weekend. Tesla suppliers in focus, especially in South Korea, after the EV maker stock jumped back into positive territory for the year. Elon Musk bought around $1 billion worth of shares. We've seen the Kospi surge lead the rest of the world, but under the hood, Tesla suppliers, including LG Energy, LG Innotek, they've missed out on the rally bell.
Yeah, really interesting moves in Tesla overnight. We will watch, of course, those suppliers, as you said. But in terms of what else we're tracking in the session today, we are setting up for gains here really across the board. It was a good session on Wall Street overnight. We saw, for instance, the S&P 500 above 6,600 points. We saw the NASDAQ seeing its longest advance since 2023. That jump in Tesla you mentioned, the rally in Alphabet. We saw optimism around a trade deal on TikTok, for instance. These are all supportive factors for the session. But the overarching theme, of course, is really the Fed and this expectation that we're going to get a 25 basis point cut. Yes, there are questions around Fed independence. If we do get that cut, is it going to be something that's really justified by what we see in the data? Lots of focus as well on the projections we get from Fed officials and their outlooks, or any indications we get that we're setting up for an easing cycle. If we're not going to set up for an easing cycle, that again could really test the market appetite, because we have seen that propensity to take on greater risk. But let's also take a look at the Senate hearing, of course, Shery, because this is a really big one, at least for Stephen Miran and his joining the FOMC meeting.
Yeah, the Senate expected to vote now on Steve Miran's nomination to join the Fed, and that FOMC meeting starting Tuesday could be the first meeting that Miran joins. His confirmation is very much expected at this point, so we'll bring you the results of that confirmation vote ongoing right now. The market opens are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens with some more positive trade headlines coming out of Madrid on that framework agreement on TikTok running in the U.S. But Belle, this hour we're very much focused on that Senate hearing and the confirmation of Stephen Miran to the Fed board.
Yeah, that's right. And if he is confirmed, which is expected, I mean, it sets him up to also join the FOMC meeting that kicks off on Tuesday. Lots of questions around Fed independence, of course, and those aren't really going away, but also that big focus on what are we going to get out of officials. Definitely there's that expectation we're setting up for a cut. Are we going to as well get any projections around further easing to come from here?
Yeah, a move very much expected from the Federal Reserve on Wednesday. A move not expected here in Japan when it comes to the Bank of Japan's policy decision on Friday. Take a look at how Japan is coming online after a long weekend. We are seeing some gains for the Nikkei, which is already at record highs. The Japanese yen holding at that 147 level against the U.S. dollars, been pretty range bound as we continue to watch, of course, where the BOJ goes from here. The 10-year yield at that 159 level. But take a look at South Korea, because this has been an incredible market. We're talking about 10 sessions of gains. We're talking about the longest gaining streak since 2019. So record highs. We've had some positive news on the capital gains tax. The Kospi continuing to gain ground, 0.4% as the Korean won is holding at that 1386 level. But of course, always the risk around these markets are the trade headlines. We know that the Korean trade minister is now in the U.S. We'll be watching for any developments, any more concrete details of those investment funds into the U.S., Belle.
Yeah, certainly one to track, of course, after you had those raids on Korean plants, rather, in the US as well. But let's take a look at what's happening in Australia, because you've just had the ASX 200 coming online, flipping back into positive territory just. We're a little bit high today, but really, it is that big countdown to the Fed meeting. What are we going to be getting out of that? Keeping a watch on what's happening, of course, that two-year yield there. We are continuing to see it retreat. So we'll be tracking as well what happens with Aussie bond yields. But certainly we are just seeing that move downwards as we see treasuries at the short end continue to rally. Aussie dollar here, again, fairly steady. We did see a bit of dollar weakness overnight, though. Also continuing to see that movement back into gold. So it's still that sort of safe haven buying still in play. But broadly in the session today, what else we're tracking is what we're seeing with Brent crude prices. Again, just coming online this morning, we are seeing this sort of question mark around, yes, you've got this expectation, maybe we actually are setting up for further sanctions on Russian crude. At the same time as well, you've got this looming sort of supply glut that's coming into the market as well. And that, at least according to our conversation yesterday with Dan Hines from ANZ, does set us up for risk to the downside for prices. But that's, again, as we said, the ASX 200 online this morning, just a little bit higher ahead of that Fed meeting.
Yeah, joining us now is Hooman Kaveh, Global CIO at Mercer, to break it all down for us. Hooman, great to have you with us. Global markets on a tear in this very, very busy monetary policy week. Could the Fed really throw a curveball to markets this week?
I'm not sure. I think it will go ahead probably with a 0.25% rate cut. I think the conditions are right for them to cut interest rates now, support the economy. Unemployment is rising, and while inflation is keeping them boxed in a little bit, I think they will do a 0.25%. But we'll keep an eye on data coming through, and we think maybe another 0.25% between now and the year end, but not aggressive, but I think they will go ahead and do it this week.
Of course, we have policy divergence to contend with, as well as the Fed is expected to cut and the Bank of Japan at some point hike rates. And yet you're long Japanese equities. Why?
Well, if you remember, perhaps when I was on this program about a year or so ago, we liked Japanese equities on fundamentals. The valuations were attractive. They have performed quite strongly. We continue to see the Japanese economy performing reasonably well. And so while interest rates will rise, they'll rise very gradually. We think perhaps one rate rise this year. But at the same time, as I said, the trade has been on for a while now, and so we have actually dialed it back a little bit, taken some modest profits, as Japanese equities have been one of the better performing major markets over the last 12 months. But in general, the valuations are good, fundamentals are positive, the economy is in reasonably good shape, so I think we continue to favour Japanese equities, let's say, over other developed market equities.
What about Chinese equities as well? They've really been on a tear. Are you buying in on that, or are you still a little bit cautious around some of the more macro factors and weaknesses that we see there?
Yeah, I think as part of the broader emerging markets complex, we're happy to have an allocation to Chinese equities, but not an overweight one at this point in time. The economy is still sort of stable, but not growing rapidly. Some sort of short-term headwinds, and so we're feeling that while the market is probably really recovering from a significant sell-off over the last few years, and rightly so, I think as part of the emerging markets allocation, I think it makes sense to continue to have Chinese equities at about a neutral weighting.
In the bond space, you're favouring Asian high yield at the expense of global high yield. Why is that?
Well, again, looking at the fundamentals, Asia economies are generally in good shape. Inflation is low, moderate, and interest rates are lower, and the valuation is very attractive. You pick up over 2% between Asian high yield and global high yield. And again, this is another one that we've had for a period of time, but it's continued to do well, and we continue to favour it, and the returns have been pretty good.
When it comes to the broader sovereign debt space, though, we continue to watch, of course, monetary policy moves. We have the Bank of England expected to hold steady. We have seen European bonds sort of gain in the overnight session. Are there any calls in that market that you're confident about?
We feel positive about UK gilts. Yes, the current economic environment is weakening in the UK. We think the government will have to tighten its fiscal position, its budgetary positions this autumn. We think that the inflation environment will improve. There's a number of one-off items, such as utility bills, drop out of the numbers. And with the slowdown, we're seeing wage increases moderating very significantly and potentially unemployment rising. And so we think the environment is right for the Bank of England to cut more aggressively than perhaps the market is expecting. And so we do think that UK gilts at the long end are attractive, and perhaps in common with Asia high yield as well, the carry is very attractive. You're picking up 5.3% at the long end of UK gilts, which is actually the highest yield since the Bank of England got its independence in 1998. And so we think it's attractive valuations. The fundamentals are supportive of more aggressive rate cuts than the market is expecting. And so, again, we're advocating an overweight position in UK gilts.
And Hooman, of course, the euro very important in the trajectory of the U.S. dollar as well. What's the direction that that currency is going to go, especially given that the dollar hasn't necessarily moved after that enormous fall in the first half of the year?
Yeah, no, I think there's been a period of consolidation for the dollar, and I think things like the gold price accelerating. I mean, there isn't really a change in inflation expectations over the last 3 to 6 months. You know, break-even inflation has been relatively stable, and yet the gold price has been on a tear, and that is signaling perhaps lower confidence in the US dollar as a reserve currency or a risk-off currency. And so I think we do expect after this period of consolidation that we probably will see further weakness in the US dollar as that develops over the next 6 months or so.
Hooman, just as we've been speaking here, we've got some pictures of the Senate, but we do have the final vote happening for the confirmation of Stephen Miran to the Fed Board of Governors. There have been questions around the role that Stephen Miran plays. I mean, he's also someone who's chaired the White House Council of Economic Advisors, so potential concerns about conflicts of interest here. That actually came into a call that we have from JP Morgan's chief global strategist as well, who's concerned about, yes, you maybe get this cut this week, but is there this question of whether it's driven by political pressures, and what does that mean for different asset classes, stocks, bonds, FX in turn? How much are you concerned by that right now?
I think that's a very fundamental question that we probably won't have the answer to for another number of months. I think Fed independence is very important to capital markets and to institutional investors. And if we see that reducing, that would obviously be of concern. Obviously, over the next 6-9 months, we're going to see Chairman Powell's term finishing up by May. There are obviously discussions around future replacement. And if that FOMC committee starts to be more politically swayed, that can be worrying. Clearly, aggressive rate cuts could lead to inflationary pressures, and that would be negative for the US Treasury market and, by extension, US assets and potentially global assets. So, yes, very much watching that space.
Hooman, thanks so much for joining us this morning. That's Hooman Kaveh there, Global CIO at Mercer. And just we're 10 minutes into trade so far this morning. So taking a look at some of the early movers, one of those entertainment stocks, so watching those closely here in Korea today and also Japan. But really the story here is that Walt Disney is bringing its marquee comics to a new digital platform and app in partnership with Webtoon Entertainment. So more than 35,000 comics from Disney, Marvel, Star Wars, 20th Century franchises are going to be available via a single subscription. Disney's also looking at a 2% equity interest in Webtoon as well. But watching, again, those entertainment stocks off the back of that. The other story that we're tracking this morning is Super Retail. And this is, of course, the owner of Rebel Sport, Super Cheap Auto Chains as well. It has terminated its MD and CEO this morning with immediate effect. That's after it received new information about a relationship that the CEO and MD had with an employee. So you are seeing that stock there under pressure so far in Sydney. But we'll have more ahead on the Asia trade this morning. This is Bloomberg.
Right, we have breaking news at the moment. We are getting a decision from the U.S. Appeals Court now saying that President Trump cannot fire Fed Governor Lisa Cook before the Fed meeting. Remember, President Trump was asking the court to let him fire Cook over allegations of mortgage fraud. But let's bring in Chris Condon to really delve into this decision because, of course, the issue of Fed independence has been talked about very much in the last few weeks. on this ongoing case around Lisa Cook. So please break this down for us, Chris.
Sure. So some just of the facts first. This is from the U.S. Court of Appeals for the District of Columbia. You'll remember that in the first instance, a judge ordered or denied the White House's request that Lisa Cook be removed from the Fed immediately. She had asked that she be allowed to continue in her post. That was granted. It went to the Court of Appeals, and the court has issued an order that the motion for stay, that is the request from the Trump administration, be denied. So as you said, that allows her to attend the Federal Open Market Committee meeting tomorrow, participate in that. It must be noted that this can go on a very fast track to the Supreme Court. Not the full case and the merits of whether she should be, whether the Trump administration can remove her for cause, but whether in the meantime she can remain in her post. So that could, I'm not an expert on the Supreme Court, but that can move, as I understand, pretty quickly as well. But in the first instance, I think the important thing is that Cook will be expected to attend and participate in the rate decision this week at the Fed.
So what happens next then? I mean, where do we go from here? And what's the likelihood that President Trump is still able to oust Lisa Cook, as he's made it very clear he wants to do?
Well, now it advances to the most important decision-making body. That is, like I said, the Supreme Court. At stake here is whether this particular case satisfies the requirement that the president must have cause to remove a member of the Board of Governors at the Federal Reserve. It states right in the Federal Reserve Act that the president can remove members of that board for cause. That cause has been interpreted by courts over about 90 years to include things like malfeasance, inefficiency, neglect of duty, all seen as very serious violations of the law or their duties in their job. And many people doubt that this rises to that level. However, the Supreme Court has in recent months been granting this White House a lot of leeway as regards other federal agencies. They have granted President Trump the ability to fire many agency heads and senior officials, where perhaps courts would not have given the executive branch before. So there is an expansion of executive power going on. This will be a very important case. I'm not going to try to predict which way they're going to go, but if Lisa Cook loses this case, it will clearly open up the possibility that Trump will try to dismiss other members of the Board of Governors, perhaps even Chair Powell.
So Lisa Cook will be at the FOMC starting Tuesday. Stephen Miran could also be in that meeting. Right. His confirmation vote happening right now. Right.
Yeah, we fully expect that he'll be confirmed and sworn in time for the meeting that should begin somewhere around 9 o'clock tomorrow
Actually,
morning.
Chris, we're getting the latest headline at the moment. The Senate has confirmed Miran, as you expected, to the Fed in time for the FOMC meeting.
So all they have to do now is push out the paperwork, get it over to the Fed, send it right down, Pennsylvania Ave and Constitution Avenue, and that'll be easy enough to do. He'll be sworn in at the latest by tomorrow morning, and he'll participate in that meeting. I don't think he'll change the outcome. They are very widely expected to cut rates by 0.25 percentage point, but he'll begin to change the tone of the debate. A lot of people expect that he may dissent in saying, I don't agree with this because I think we should cut by 0.5 percentage point. So he wants a bigger cut. That's not written in stone yet. We'll see. There is the possibility that he may go in and take a gentler approach and try to build some trust among his colleagues. But there is a heavy expectation that he will, in fact, just charge in and dissent in favor of a 50. Again, that doesn't change what the Fed will do in the near term. It starts to change the tone. And it's also very important that he remains a White House official. He's taking an unpaid leave from his job at the Council of Economic Advisors. He has himself talked about the problem created in the past by there being a so-called revolving door between the Fed and the executive branch, but he has chosen, when it comes to himself, to continue that revolving door, and he's not even resigning from his position at the CEA. So that represents a serious concern for those who are worried about the independence of the Fed and its credibility in maintaining its watchfulness over inflation.
Chris, thanks so much for joining us. Of course, really great timing as we get that confirmation. Stephen Miran is joining the Fed in time for its meeting on Tuesday. So that was Bloomberg's Chris Condon there. But at the same time, of course, monitoring the trade headlines. And President Trump says he's going to be speaking with Chinese leader Xi Jinping on Friday about what he calls a big deal. He spoke after officials from both countries met in Spain, and they reached a framework deal on keeping TikTok alive in the US.
It's important, and it can maybe even bring us closer to China.
Let's bring in Bloomberg managing editor Jill Desis this morning. And Jill, I mean, TikTok was sort of seen as a bit of a low-hanging fruit, one of the easiest ways to sort of strike a deal. But the significance of this as well is that it opens the door maybe to more talks and more areas for negotiation.
That's right, Belle. Although, I mean, even when we talk about that low-hanging fruit, it's still, I think, kind of unclear about how much has actually been resolved here, right? Because you've got, what Trump is touting as this framework deal. We certainly heard that out of officials from the U.S., Besant in Madrid. But we don't actually have any details of what this TikTok plan looks like, right? So we don't know whether Beijing is actually going to completely divest its stake, which was sort of a critical component of getting this kind of a deal over the line, was sort of selling that American part of the business off to, a different company. We don't know if this is going to be in compliance with any of the U.S. national security laws that were passed in January. So that's still an open question. But yes, to your point, Val, it does seem like it's sort of like a vibes-based diplomacy approach, right? Like we're just trying to get to that potential meeting between Trump and Xi. We've got this phone call that's happening on Friday. We're still maybe in line for something that could happen when Trump travels out to Asia at the end of October. So that does seem to be at least where we're heading here, is like, let's just keep the good vibes rolling, try to get to a point where Trump and Xi can actually have that really critical in-person meeting.
Yeah, and I think Wendy Cutler was making the point in the last hour from ASPI that, it took 2 days of negotiations just on TikTok, which just tells you how many thorns there are in these talks as well. But that was our managing editor, Jill Desis there. We'll have more ahead on the Asia trade. This is Bloomberg. Well, shares of LiDAR maker Hesai have jumped in grey market trading ahead of their official debut later Tuesday in Hong Kong. The company raised more than $530 million in its secondary listing, the latest in a wave of US-listed Chinese companies offering shares in the city. Let's bring in our Chief North Asia correspondent, Stephen Engel, who's down at the stock exchange for us. And Steve, I mean, it seems like we're going to get a nice pop today at the open then.
Yeah, that's right. So there's been obviously a big boom in Hong Kong new listings, and this is another one in addition to what we've already seen, of course, CATL a few months back. But this is the world's biggest LiDAR maker for the auto industry, but they're also going into more robotics and other areas and technology that uses the LiDAR technology, light detection and ranging, as it is known by that acronym. And yeah, it's not a huge listing here in Hong Kong. It's a secondary listing because in 2023, they listed on the NASDAQ HSAI, and that stock has been on an absolute tear. It's up more than double so far year to date, up about 115% and up 264% since December 1st of last year. Again, it supplies a lot of or if not almost all of the major Chinese EV makers with LiDAR sensors. They've been able to bring the cost down significantly, and they've also just announced a $40 million partnership with a major robo-taxi company. That is something we're going to talk extensively about with the co-founder and CEO David Lee coming up just after he bangs the gong here at the Hong Kong Stock Exchange just after 9:30 this morning. So a lot of exciting developments, obviously, to talk with him about.
And very timely, of course. You mentioned public listings in the city becoming very, exuberant these days.
Yeah, that's right. I mean, the proceeds from listings here in Hong Kong on pace for the biggest, treasure trove since 2021. Hong Kong Stock Exchange, the HKEX, already reporting stellar numbers in the second quarter on this demand, as well as pipeline for IPOs. And also sort of the rehoming, if you will, of a number of Chinese companies who possibly face delisting in the United States. Keep in mind that Hesai has been put not only once, but twice. It was taken off this Pentagon list of possible security risk because of its reported or alleged ties to the Chinese military. It is still on that list. So there is a delisting risk for a company like Hesai in the United States. So this is the first of a number of companies that possibly could see a string of return home kind of listings here in Hong Kong.
Chief North Asia correspondent Stephen Engel there in Hong Kong. And do join Steve for that conversation with the CEO Hesai Technology, David Lee. This is Bloomberg. Take a look at how we're trading across Asia. We continue to see record highs, especially for the Japanese stock market and the Kospi as well. The Kospi on a tear, up for 11 consecutive sessions, already gaining more than 40% this year. The Nikkei coming back from a holiday, playing catch up 0.1%. Although the Japanese yen has really been range bound, especially headed towards the Bank of Japan policy decision. And of course, it's been an everything rally, right, Belle? We're talking about everything from the U.S. stock market seeing fresh highs, but also emerging markets continuing to gain ground. Yeah, we've seen a lot of investors pouring money into those markets, and China, of course, is one of the big markets we've seen it really standing out, and lots of questions, not just around that tech story that we see from the US, but it's also that innovation story we see in China. I think Hesai, we were just speaking with Steve there, but it's a perfect example of that, the world's biggest LiDAR maker. But also some interesting moves happening in the bond space, because JP Morgan has just issued some changes that it's making to its largest bond issuers in its flagship EM index. So you can sort of see here how we're laying that out. But the issuer cap is going to be cut from 10% to 9%. So the bank says this is about sort of lowering the diversification threshold, making it a little bit more balanced in terms of the regional exposure, decreasing the concentration risk, but certainly it's something as well that sets up some fund flows and maybe some shifts from China and India into other markets. Yeah, I mean, this is a very interesting index, right? Because it's a main benchmark for development nation debt, also followed by funds managing over $200 billion. So very consequential, and any change to its composition will have global investment flow impacts. Like, remember when Chinese bonds were phased into the benchmark back in 2020, and when Indian debt was added last year, and the weighting reduction now will affect some of the largest bond sellers in the markets like Indonesia, Mexico, and Malaysia as well. Let's just get back on that story, the moves we're seeing into EM generally, because one of the interesting ones about China stocks has also been that divergence we see between A and H shares. But actually maybe the case is starting to build for Chinese H shares to catch up. They've been lagging their mainland peers, but cheaper valuations, high tech exposure do seem to be bringing rather investors back. So let's get more now with our Asia equities reporter Winnie Xu joining us from Hong Kong. So Winnie,
Why is this the case then, do you think? I mean, we've seen that lag. Why could we start to see it sort of reversing again?
Yeah, it is an interesting trend that we're seeing, right? Because right now, month to date, we're seeing HSCI up about 5%, while the CSI is just about 1%. And it is a sharp reversal because we've been talking about this anti-involution campaign supporting the onshore stocks. But now the outperformance of H over A, when you look at the monthly basis, is the biggest since February when we had the DeepSeek optimism. So right now, the trends are starting to turn, and we're hearing from investors from JP Morgan, from Bank of America and Citi expecting the outperformance of H over A to continue. And there are several factors. You mentioned just now valuation. The valuation of H is still a lot cheaper than A. And when you look at the technical side of things, H is also less overheated compared to the A shares that have been really thriving under this ongoing rally that we're seeing. And also, when you look at the foreign fund flows, right, or just fund flows in general, domestic sentiment for H shares is actually quite high. We saw southbound inflows for the past 12 sessions, and foreign investors, Morgan Stanley actually last week said that they saw the highest interest from U.S. investors around Chinese equities, the most since 2021. And obviously, H shares by nature has a lot of these tech names that would benefit from this global tailwind that we're seeing for tech, and they have more liquidity, and foreign investors prefer them over onshore stocks that are just more generally exposed to the overall economic situation, right? And we saw that the economic outlook right now actually still remains quite dim at the moment, especially after the set of data that we saw yesterday. So overall, that trend shifting is likely to continue. And when you look at the broader macro backdrop, we have tariffs. H shares are a bit more less sensitive to tariffs, and also they will benefit more from the Fed rate cuts to come.
What about the fact that also cross-border financing rules have been eased? What will be the role of foreign capital and the broader meaning for the markets and just the economy as well?
Yeah, so that really goes to show how the government right now is trying or have these efforts to support for more stimulus and support the property market that is still struggling a lot. Yesterday, we saw the data set showing that, home prices are still showing the trend of deceleration. And there is more need right now for the government to step up. Yes, we do have these efforts so far supporting the domestic investors to invest more in property. But now we're seeing that the government also is trying to attract foreign flows into the Chinese assets. And actually, it's a pretty good timing when you look at how stocks have been rallying and how, the yuan actually appreciated as well. So we've been seeing the foreign money started to come back in, whether it's via the iShares ETFs listed in the U.S. or in general, we are hearing from our buy-side sources that they are seeing investors putting more money. Yes, we had that news earlier on about JP Morgan not favoring too much Chinese bonds. But if you just look at the equity space and then you look at the currency space, there is that trend of foreign money flowing back. So with that sentiment around foreign investors looking for the diversification of assets, China still looks like a pretty attractive spot right now with further support from the government. And it's more than necessary right now for the government to do that, especially because they want to hit that 5% growth target this year.
Yeah, you certainly saw those moves in China bond yields yesterday, really reflecting that need or that expectation we're going to see some further easing. Thanks so much, Winnie. That was Winnie Xu there, our Asia equities reporter. But more ahead on the Asia trade. This is Bloomberg.
Australia has committed $6 billion over the next 5 years to climate adaptation spending. That comes as two government reports warn of more frequent, severe and overlapping hazards caused by global warming. Let's bring in Bloomberg NEF Head of Australia Research, Leonard Kwong. Lenny, so will this funding be enough, or does more need to be done in order to manage Australia's climate risks?
So it's really just the tip of the iceberg. The recommendations for this adaptation spending have come on the back of the release of the National Climate Risk Assessment, which is Australia's first deep dive into the impacts posed across the economy and its population from a warming climate. And the results of this analysis were pretty remarkable. In some areas of the country, the threat of deaths caused by extreme heat could rise by over 400%. Some prime agricultural land is under threat of near total collapse, and the potential damage bill to infrastructure and property, particularly in coastal or more rural communities, could run into the hundreds of billions of dollars. Now, the National Adaptation Plan is the government's strategy for where investment could be best placed to manage some of the vulnerabilities to the economy and to the population in the years to come. But what's been highlighted by the government in these reports and other commentary is the amount of adaptation spending required is ultimately determined by the amount of warming Australia and the world faces. In a scenario where climate change is 3 or even 4 degrees Celsius above pre-industrial levels, the potential risks and therefore adaptation costs would be far, far higher than a scenario where the world manages to constrain global warming to no more than 2 degrees Celsius above pre-industrial levels. And unfortunately, the trajectory we're on right now is a bit of an unanswered question.
Yeah, exactly. I mean, what sort of emissions target is Australia expected to adopt? The risks are there, but are we actually going to be really addressing those fully?
So right now, no one really knows exactly what targets Australia is likely to adopt, hopefully within the next couple of days. Ministers have done a wonderful job keeping this particular secret under wraps, but there are a few things that we do know. Right now, Australia is committed through legislation and its existing NDC to achieving a 43% reduction on 2005 level greenhouse gas emissions by 2030, so just in 5 years' time. And recently, in a report, the independent body Climate Change Authority has recommended that the government consider a target between 65 to 75% below 2005 levels by 2035. Now, a lot has been said about that recommendation. Those in Australia who would like to see greater aspirations for deep decarbonisation have been lobbying the government to consider a target on the higher end of this range and will be spurred on by the recent release of the Climate Risk Assessment. Those, and some in the business community, more concerned about the potential costs and disruptions from an energy transition, have been suggesting that the government consider a target on the lower end of that range or even below 65%. Now, the climate impact is an interesting question to delve into, and something we looked at in our long-term energy market analysis, our new energy outlook last year. And in that, we considered a scenario we termed the net zero scenario, where the world rallied around deep decarbonisation and managed to stay on a pathway of about 1.75, so well below 2 degrees of warming. And in that analysis, we found that Australia's energy-related emissions would need to fall by about 70% on 2005 levels by 2035 to remain on the correct trajectory. So from that, we can see that if the Australian government does commit to a target at around 70% or perhaps even above, it's a signal that they remain resolute in their commitments to deep decarbonisation. If, however, they're weighed down by concerns about international geopolitics around decarbonisation, they may opt for a lower target as well.
Great insights. That was Bloomberg NEF Head of Australia Research, Leonard Kwong there. And let's get more on this now with our next guest. Joining us is Amanda McKenzie. She's CEO of Australia's Climate Council. And Amanda, I mean, we just heard sort of Lenny laying it out there for us. We really don't know the target that the Albanese government is going to set. But what's your expectation of the number that we receive?
Well, Lenny mentioned that range of 65 to 75%, which the Climate Authority had put out in 2024 in May as the range that they were considering and may form a recommendation. So we expect that the Climate Authority may have already made that recommendation to the government and that the government is considering it. But the important thing, as Lenny mentioned in terms of the risk assessment, is that the risks for Australia are incredibly severe and the trajectory to slash our climate pollution now needs to be very steep. So we have done our own scientific analysis, which replicates the scientific analysis of other bodies that shows we need to bring net zero forward to 2035, so 15 years earlier than what is currently slated.
And I mean, yes, you've got that need maybe to bring it to 2035, but do you think that that need is also appreciated by the government and also everyday Australians?
Well, it was really interesting in the last few weeks seeing a group of businesses led by Fortescue Metals and the Future Group, Unilever, a range of other businesses all coming out and calling for 75% plus. They also released some modelling by Deloitte, which showed that a higher target, 75 versus 65, would reap additional benefits to the Australian economy, flipping the sort of standard economics on it, maths on its head, because the idea is that if Australia does have a strong signal to the global market, which is competitive around clean energy, clean green metals, that would attract far more investment into the Australian economy. So there has been a significant number of businesses, now over 500, that are advocating for strong targets from the Australian government.
So what are the biggest opportunities, do you think, for Australia to become a clean energy powerhouse? And given that other major economies are also racing ahead with renewables, what are the risks of Australia lagging behind?
Absolutely. Well, Australia is the sunniest country in the world. We're one of the windiest. We have huge resources in lithium, as well as a range of other critical minerals that go into building parts of our clean energy infrastructure. So Australia is very well set up to benefit, to become a clean energy superpower. But as you said, there is a global competition for capital as many countries are moving forward rapidly in renewable power. So it is important that Australia has a very clear market signal, which comes from our target. There are also many other opportunities in exports, for instance, green metals like green aluminium, green steel, green iron, that Australia may be able to export into the future, relying on clean, cheap energy as a consequence of having so much renewable resources here. So there's a lot of opportunity for Australia in the 21st century to draw on as we have a clean energy economy.
So those are the economic opportunities. What about the economic risks of not doing anything around climate change, given that the insured costs in Australia now, because of extreme weather events, are around the billions?
It's very worrying. And of course, just in 2025, we've seen very significant extreme weather events, from the bleaching of the Great Barrier Reef to the algal bloom in South Australia, which has been devastating fisheries and tourism industry in that state, as well as the drought in southern Australia and great flooding events in northern New South Wales and southern Queensland. So just this year, we've seen continual extreme weather events that have had a real drag on the nation's economy. And what the risk assessment shows is that drag will become almost unmanageable by late this century if we don't act much more quickly. And of course, that's true for every country around the world. But Australia is particularly vulnerable in terms of compared to other developed nations. So it's certainly in our interest to protect our own economy and our people by tackling the climate crisis here and advocating abroad for greater action.
That was Amanda McKenzie, there, CEO of the Climate Council, and we'll have more on Australia Ahead every Tuesday at 10:40 a.m. if you're watching in Sydney. That's 8:40 a.m. here in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. So you can find that on Apple, Spotify, or Bloomberg.com. We'll have more ahead on the Asia trade. This is Bloomberg.
Annabelle, we just had the confirmation of Stephen Miran to the Fed board. Of course, we were expecting that to happen. He will now be present at the FOMC that starts on Tuesday. That Fed decision, of course, expected for a rate cut of at least 25 basis points. Could it be a 50 basis point cut? And what happens next is a key question. But this is really historic. We're talking about a White House official who's now on unpaid leave from his post, actually taking a seat at the FOMC. First time in 90 years this has happened, and of course really raising questions about Fed independence, especially around the firing and the controversy around Fed Governor Lisa Cook as well.
Yeah, that's right. I mean, he's someone who's chaired the White House Council of Economic Advisors, and even as you say, he's taking a leave of absence from that unpaid. It's certainly really raising the question around Fed independence. I think people would really love to be a fly on the wall in that meeting, what's happening tomorrow, because it's certainly going to be big questions around what sort of call is Miran going to be making, and how much is he going to be pushing for deeper cuts? Big questions as well. Do we sort of start to set the stage for further easing, or is this going to be just a sort of a cut for now, but then going back on hold for a period? As you mentioned, yeah, Lisa Cook. I mean, this is the other big story that's just happened in the last few minutes, really. But the finding here from the U.S. Appeals Court is that they've blocked Donald Trump from removing the Fed Reserve Governor Lisa Cook from her post while her lawsuit challenging the dismissal proceeds. So again, that's something that President Trump wanted to see, but it is certainly a win for Lisa Cook. She's very much embattled here, but it has been a divided appeals court in Washington as well. But it's a 2-for-1 ruling on that.
Yeah, we're really delving into the details of those mortgage fraud allegations around her house in the Atlanta property that she says has listed as a vacation home. But as we continue to watch that perhaps attack on central bank independence in the United States, we're also watching what happens to Chair Powell. His term expires in May next year, and there are many contenders to that post at the moment. Now, Reuters has reported that Jim Bullard had a conversation with Secretary Scott Bessent as well. Other names have been floated, including Rick Ryder of BlackRock, an executive there, but perhaps placing him on the list of who could succeed Chair Powell. So right now, as we head towards a Fed meeting, an expectation of a rate cut. But what happens with the dot plot? Are we going to see that clarity over more cuts to come, especially in the first quarter of next year, is a key question. And as you see, perhaps the composition of the FOMC also starting to change. That will be, of course, what investors will be watching in terms of the dovish or hawkish tilt coming from the U.S. Central Bank.
Yeah, that's right. What sort of indication do they give us on that path for easing ahead? But certainly going to be watching this meeting very closely. In the meantime as well, Apollo Global Management's president, Jim Zelter, says there's lots of investment opportunities in Europe. That's especially as governments face challenges meeting industrial spending demands. He spoke exclusively with Bloomberg on the role the company could play in the region.
This is the most unique period of time in Europe. You know, for the first time in decades, I think there's the good thing about this administration is that the memo has been sent out about global growth and responsibility and accountability. And as a leadership in the countries around Europe are trying to figure out what that means for them, there's certainly a conversation that Apollo wants to be a part of, and we find ourselves being the recipient of a lot of dialogues and part of a lot of dialogue. So very exciting time. It's not a clear picture. And like usual, Europe has many different stories in terms of the continent and each country, what their objectives and needs are. But very exciting time for Europe, and we've been very public and pronounced about what our ambitions are, whether it's $100 billion in Germany or several $100 billion around the continent. We believe we're going to be a player in that dialogue.
So where do you see the best deals actually in Europe? And when you talk about dialogue, will that translate into actual money being spent in Europe?
Well, I think before you get to deals, you know, around the globe right now there's this massive global industrial capex needs and global industrial renaissance, which is really the provision of capital for whether it's energy, former utilities, transmission lines, whether it's energy sustainability and the modernization of that, whether it's data centers. You know, we find ourselves in a situation where, you know, for the most part, corporates and consumers, our balance sheets are pretty solid, where governments are a bit more challenged. So I think there's a realization that there's a dramatic need for CapEx, and governments on their own are not the solution. And so, you know, every country in Europe has a different objective in terms of their fiscal policies and their fiscal ambitions. And they have great ambitions, but a limited budget to provide that. So I think as the world of finance continues to evolve, you know, certainly we've been quite active in Germany. Yep. We've been quite active in France. You know, Athora, in their recent announcement of the purchase of PIC in the UK, which is a different conversation. But, you know, I think we find ourselves, particularly in those two countries, and yes, some in Italy and some in Scandinavia as well. So it's fairly broad brush, but these are massive, massive ambitions from which to fund.
And breaking news right now, Tencent marketing its first bond sale since 2021 with dim sum notes. The proposing was about selling offshore yuan-denominated notes with 5, 10, and 30-year tenors. We don't know the total amount that Tencent aims to raise through this offering, but we'll continue to get you the details on the China Show next. This is Bloomberg.